all, good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain, with me Saisha Faridi, and we have a good recovery at our hands. In fact, we are very close to those record high levels. 21,492 thereabouts was the all-time high level. We did not hit 21,500 yet, but if we continue with the momentum that we are seeing right now, it might just happen today. That's what we are hoping for. In terms of the sectors today, it's actually defensives and FMCG pack which are actually doing well. It's also Reliance Industries which has managed to perk up quite a bit. There's a gain of almost 2% on that stock, and that's adding almost 40 points on the upside for the index. As I pointed out, defensives seem to be the flavor of the day. So you have FMCG pack, which is actually the best performing sector. You have Nestle, which is high by 3 to 4%. Good amount of traction seen on the likes of HUL, ITC as well as Tata Consumer. So all of these stocks are participating. What is not really participating is IT. So after that big run that we saw over the last 3-4 trading session, it's finally taking a bit of a breather today.
Yeah, it is. Seems like it was just a last week fad or so. But today, definitely IT is not participating. You've also got some of the other names like Bajaj Finance, iShares, and these have been really poster boys of the last 6 months at least. Adani names not participating in today's move. But irrespective of that, you've got the index and the futures now only 30 points away from 21,600. Point being another 400 push, and you've got a near about 10 days to go still for the year to close. We could make it to that 22K mark, who knows. But that said, a lot of stocks which are in focus and reacting to the news flow. Case in point, of course, being Nestle, that has been the top winner on date from the word go today. There is a stock split which the management is going to be considering. That stock, of course, holding higher today in trade. There's also Reliance. JP Morgan is maintaining its overweight target price of 28.10, so that also is contributing a good 2% to the market move today. And then, of course, there are a whole host of mid caps as well. Shankara Buildcon, the company has now approved a demerger of the trading business. That stock as well is buzzing higher by about 9% or so, almost 1 million shares traded at that. From within the liquid universe, it's Hindustan Copper, there's Voltas, there's Delta Corp, there's Coal India. They are the ones which are the high flyers today. And at the same time, you've also got a Nalco and Sale on the other hand, which are not participating today. Z, after it seems like it's going to be once again locking horns on the merger with Sony, that stock is well down by about 2.6% as we speak right now. But let's welcome on board Kunal and Naresh. We'll have Jonathan Shizel as well join in just a short while from now and try and figure out what the trading texture of the market is looking like. And Kunal, today it seems to be it's all thanks to Reliance, SBI, and to some degree Axis, right?
Yeah, I think a different first half of the markets because we saw the index getting into a mild bit of a correction, 200 odd points for the Bank Nifty and some 60-70 points odd for the Nifty. But I think the second half more or less has been a good comeback for large cap names. What's also exciting to see in terms of the data for these large cap stocks is a major amount of short covering which has now happened. So I think this could probably be a strong indication that traders have started to unwind their positions strongly for these large cap names, Reliance, HDFC Bank, IndusInd Bank, etc. And these were the ones which were underperformers or rather huge underperformers over the previous trends for the indices. My sense is that we would probably keep on getting this odd 50-70 odd point correction on the Nifty. I think that's one of the best ranges to try and take advantage, especially if someone is an index trader.
Okay, point taken. Let's address some of the stocks in news as well. You have Nestle, as we pointed out, which is high by 4%. Company has fixed 5th of January as the record date for the split of the shares. So ahead of that, we are seeing some traction on that one. So 4.5% higher as far as Nestle is concerned. Reliance is the other one that we are watching out for. There were a couple of brokerage notes. UBS has actually upgraded the target price, which stands past the level of 3,000 rupees now, and JP Morgan too maintains overweight with a target price of 28.10 on the counter. They say that earnings cut should largely be over now. It is retail as well as telecom, wherein we are expecting the operating performance to improve from here on, even as the company ends its overall capex cycle. Shankara Buildcon is also seeing quite a bit of action. In fact, at one point of time, that stock was up around 10-11%. It's cooled off a bit now, but the company has approved the demerger of the trading business. The shareholders will get 1 share of Shankara Buildpro for 1 share held in the company as well, and the demerger is expected to happen over the next 10 to 14 months. We'll also get Ansh to join us shortly to talk to us about the demerger of Shankara and what does it mean for the investors. But for now, let me take it across to Naresh to get a sense on the stock prices of some of those. Reliance, Nestle, Shankara Buildcon. What is the view on these stocks, Naresh?
I'll start off with Reliance Industries. That looks promising, good momentum and a follow-up today. And now the next price to watch is for 2650. So that should be a short-term target, which was the recent high as well as the high in last year without considering the geofinance. But that's the case. 2650 in the near term looks pretty much possible. Nestle as well as Shankara Buildcon are news-based moves. Could be a single-day move. May not see a strong follow-up going forward. So would wait out for another day or two to actually take a call. Nestle has been in a slow and steady uptrend, but today is more like a move on the news, so would wait it out.
Okay, point taken. So that's the latest as far as Nestle is concerned. But for the index itself, what's your view, Naresh? Because we're seeing quite a bit of momentum on the banking names also today, while IT is seeing a bit of a slip. Time to profit book on IT and churn the positions?
Not really. IT saw a very strong move in the last couple of sessions, would wait out for a dip. So this dip maybe a little more to go before one can look at buying. Not the time to book profit as such. In terms of the index also, the only way one can ride this move, such trends, is to keep a trailing stop loss and go on. Banks have still not hit a new high today, but overall structure looks positive. So the view is positive for now. We could possibly get into a range bound move where 21,600, 650 could be a upper side band and 21,200 on the Nifty. So expecting some bit of a consolidation, we may not see a spiky move as of now.
Okay, point taken. So that's the latest coming in. In fact, we are also tracking what's happening in the cricketing arena with the IPL auction being underway and quite a few high flyers at that. Pat Cummins being sold, upwards of 20 crore rupees. I think that's the best deal we have seen so far. But what to make of this? We have Atul Vasan joining us on the show. He's, of course, the ex-cricketer to talk to us about what's been happening in the IPL auction. Atul, hi. Thanks so much for making time and speaking with us. 20 crore rupees. Clearly, it seems like, rationale is out of the picture here. They're willing to buy the big performers for any value.
Yeah, I know, and especially because a lot of the top players from Australia had abstained from playing IPL last year because they wanted to prepare for Ashes and the World Cup and see how they have, got back the dividends. And he's the World Cup winning captain, so he's very marketable commodity at the minute. And I think 20 crores, you can say it's not really deserving of that for a short tournament. But still, I think it shows that it's more than cricket. It's just not the players playing on the field. It has to do with the packaging, the branding, and what is the marketability of that particular name, which the franchisee can get some revenue out of it.
Well, I think, though, the talk of the town has been Hardik Pandya replacing Rohit Sharma as Mumbai Indians captain. I mean, what he couldn't do for the World Cup, perhaps this time he could create magic for MI.
Well, this is again, I always believe that IPL is another product. It's just not cricket. It's entertainment, cricket, and business all put together. So a lot of cricket rationale is out of the window when we discuss. And like you are shocked, I am also shocked because Rohit was the captain for India in T20, and I think going forward, the picture is clear that he will not be captaining India in the next World Cup. That is clear. And I think Rohit has been there, done it, got the T-shirt. He has won it multiple times. He's got nothing more to prove. And I think for him also, it must have been his choice to step down as captain and just enjoy his game. He's in a patch of his career where he doesn't want that extra pressure, liability, or that headache of being the captain. And franchisee, the owners put a lot of pressure, even more so than the Indian team, actually.
Since we're talking about cricket and you're talking about shorter format, what about those reports of perhaps a shorter format for white ball cricket as well? What do you think of that? And overall, in terms of cricketing itself, do you think it's too much of that? We're just winding down with the World Cup fever, then a series started, and now, of course, we'll have IPL around the corner as well.
Yeah, I think so. The writing is on the wall. I think there is no more room for another format in cricket. I think going forward, we should stop at least the bilateral series. We should play, Test cricket bilaterally. But I think going forward, ODI bilateral series and T20 bilateral series has to be very, very limited. Otherwise, the law of diminishing returns kicks in. Now, after the World Cup, I have even not watched the Indian team playing T20s in the series, because that, that feeling is depleted. And I only want to see that high octane, high entertainment, high pressure situation of a World Cup or a mini World Cup. So I think going forward, we should have multinational multi-nation tournaments. Could be pentangular, could be quadrangular, and the World Cup coming every other year, either fifth or T20 cricket. That is the way forward. If we keep on playing bilateral series, I think the value will be diminished.
And last question, Atul, before we let you go. Whom else to watch out for? Pat Cummins already done and dusted. Which are the other ones that we should watch out for now?
Watch out for, I think, it's just, I'm a bit of a skeptic. So I'm really not keen on too much money going to the foreign players. It should stay within India.
Yeah, good thinking. Atul, great having you on the show today. Thank you so much for taking the time out.
Thank you. Bye.
Okay, that's that. Well, talk about valuations, and clearly no PE multiple applies when it comes to IPL auctions, does it? Okay, on that note, we're going to take a very quick break, holding at the high point of the day. In fact,
I think it's a record high.
It is a record high, but I'm just
high.
waiting for that 21,500 trade. Should happen anytime now. We'll take a break, be right back, continue tracking markets.
Welcome back. So we did hit that mark of 21,500 on an intraday basis. But we have just cooled off from that level, holding on to 20,480 thereabouts. So not much to complain. Let's take a look at the banking index as well as to what kind of run up we are seeing there, because it was a bit skittish towards the earlier part of the trading session. Right now holding to the highest point of the day. The mid cap and the small cap indices should also come up for you on the screen. Pretty much toe to toe with what's happening in terms of the benchmark indices as well. Quickly talking about some of the big movers in terms of the individual names. You have ICICI Securities, which is perking up. Edelweiss Financial. You have also Indian Railway Financial Corporation, which is higher. Century Ply, Green Ply, Devyani International, G Shipping. These are some of the names that continue to inch higher. But we also have Jonathan Chisel joining us on the show to talk to us about the fundamentals. Jonathan, hi. Good to be speaking with you. Finally, do you think it's the time of a comeback of the large cap names, and 2024 could well be the year that will belong to large caps and not the mid caps and small caps in India?
Yeah, look, I mean, to be honest, the Indian market is, large cap, small cap. I mean, compared to most other markets globally, the Indian markets have performed extremely well. Yes, the mid caps have done extraordinarily well. And obviously, we have seen some catch up more recently of some of the larger cap names. I think, the likelihood is certainly from a foreign investor perspective, continued inflows into India. So, and that will mostly be focused in the large cap space. So I think the large cap space does look well supported going forward. But obviously, they have done very well already.
And what about India as a whole? Because when we started off this year, we weren't expecting much from India. In dollar terms, people were expecting maybe 2 to 5% kind of growth, but we have managed to beat all those expectations. Next year, do you think this could continue with that big elections also lined up for India?
Absolutely. I mean, obviously, next year is going to be a very key one. I think perhaps the mistakes that some investors, including myself, if honest, I thought India had done already exceptionally well vis-a-vis markets like China, and I was expecting a bit more performance from China and some money to sort of come out of India and head back to China. Clearly, that hasn't happened. India's continued to go from strength to strength. So I think 2024 probably will be a good year for India, but valuations are a little bit, a bit on the high side. But I still think flows will remain positive. And the global backdrop, if the dollar continues to, if the dollar comes off a little bit, US interest rates ease back, that should be good for the markets like India and other emerging markets as well. So it should be a reasonably good year, I think. So remain quite positive.
So, Jonathan, just wondering, is it time to now take tactical calls, ease out from small and mid caps, allocate larger chunks to perhaps large caps right now, and especially within large caps, the underperformers?
Lesson, I've been investing in India for over 25 years. And sometimes, like earlier on this year, we took a little bit of money off the table in a couple of Indian stocks, thinking they'd done extremely well. Momentum clearly has been strong, and they've carried on moving higher, and we've probably sold a little bit cheaply with hindsight. I think India, as a whole, is a fantastic compounding market. very good for long-term investors. To trade the market, fine. That's a very good strategy if you're prepared to do that. We are sort of slightly longer-term investors. That's our style. That's what our investors know us for, and we tend to sort of buy and hold. So for us, absolutely, we think the market should be a pretty good market next year, but trading in the short term comes with its own risks. We're longer term investors, so we find them, short term market timing a bit more difficult.
Sure. Let's take a look at Coal India. That suddenly spiked as much as 5%. Not sure what the news flow is. And that's not alone. You also have NLC India perking up. So that too has moved higher. So some of these coal and mining related stocks are doing well. But that brings me to my next question, Jonathan. It's been the year of PSU names, the public sector entities here in India. What's the FI view on it? Because it was one space that was always marked by regulatory uncertainty. But now, given the value on the table and kind of returns, are FIs looking to bet even on those names?
I think to an extent that's true. For ourselves, we've always been a bit cautious for the reasons you highlight. And obviously, from time to time, we've seen the government releasing stock as well into the market, which provides a bit of an overhang. But yeah, from our perspective, there is the governance issues around a lot of these PSU stocks. Some of them are very good businesses, absolutely, no doubt about that. But we've tended to shy away from PSU stocks for those governance issues and obviously worries over potential share sales. But that said, there's no doubt there will be other foreign investors who will be looking at that part of the market for the valuation attractiveness. But to our mind, there's a reason why a lot of those stocks are a little bit cheaper, and that's obviously the governance side, which there are some other questions that need to be addressed on that.
Right. Kunal, so let's talk about some of these PSUs with you, right? Because time and again, on a daily basis, one of your top picks is invariably a PSU, be it a Coal India, NTPC in the past, some of the power names as well, or railways and defense. Still go long into 2024 into this as a theme?
Yeah, I think the momentum is not died down for the stocks, and I think the classical example over here is RSC PFC. These stocks were overbought quite some time back, but then these stocks have moved up from an overbought territory to a very strong territory, and we can expect something very similar happening for many of the PSU names. So I think Coal India has just come out of a major resistance. So in terms of the monthly and the quarterly chart, this is the second quarter on a trot where the stock has shown very good recovery, breaking past about the 240, 260 hurdle, which was a major resistance for Coal India, and now, of course, about the 360 mark. So I think in terms of the time frame the stock has spent, it's hardly been just a couple of quarters for the stock breaking past about those major resistances on a trot. So I believe that this should be at least a multi-year rally for Coal India, and I think the best way to try and capitalize into the trend for these stocks is to use those odd corrections which come by into these stocks. So there will be a point where the stocks on an average may correct by 5%, 3% to 5% band. That's the best time to try and average out holdings or try and accumulate further.
Okay, point taken. So that's about some of these public sector entities. Some of these logistics stocks are also picking up, especially the railway names. So IRFCL, as I was pointing out, Railtel Corporation as well from that entire ancillary, and G Shipping from the shipping world is also perking up. What's your view, Naresh, on some of these counters?
So out of these names, GE Shipping looks promising for the fact that it has been a slow and steady move and finally has caught momentum. And we are seeing momentum across the board in shipping names. So GE Shipping on dips is still a buy. Shipping Corporation of India similarly is a buy on dips even at current levels. In terms of railway stocks, it's a tough call now to be buying at these levels because the names have gone up 3x over the last 6 to 9 months. In such a period, the risk reward is not great. So one has to have very tight stop losses. For example, now Railtel has given a breakout on a very short-term basis, but one should have a strict stop loss below 295 if one wants to participate.
Right. Okay, that's the call coming in on some of the shipping names. Jonathan, given your view on the PSU pack, where else do you think momentum is there, and you'd like to stay put?
So, we, and I think I've mentioned it a few times in the past, we still very much like the financial space, the banks. Again, for foreign investors, some of them can't trade in the domestic market. They have to trade in the ADR market overseas, and you can buy Indian banks there, private sector banks, which are a great player on the broader Indian story when you've got a limited pool of stocks to be able to choose from. So the banks still look good to us. Yes, they've done reasonably well. IT's done very well as well, but perhaps some of that momentum for next year is being priced in. But I think you're seeing that across many markets. So, I think sticking to the core sectors probably is a pretty good idea. I think a lot of the money that potentially could come into India next year probably will come in via ETFs. So the larger sort of sectors from an index perspective should do fairly well.
Okay, point taken. So that's about some of those public sector entities and the kind of move that we have seen. What else is happening in the market? It is SAIL, which is down 3%. Siemens, which is coming under a bit of pressure, and then Nalco and some of the other metal names are also down and out in the trading session. Having said that, Hindustan Copper continues to scale fresh highs, so 5.5% higher. Voltas has made a bit of a comeback. Delta Corp, which was out of the F&O ban, is also seeing some buying action. But of course, the one space which is outperforming is FMCG as a pack. Kunal, what would be your recommendation when it comes to FMCG? Are there any names that you would want to take a bet on, or just because there are better opportunities available, perhaps just be in those spaces?
I think it's a good time to try and balance out with some low beta stocks or more of the safer names in terms of the beta nature of these stocks. So I think HUL and Marico are the two names which are looking attractive on the charts. In fact, HUL today, if I'm not wrong, has also confirmed a breakout of the 200-day moving average. Marico above 547, 548. The last I had seen, I think has also broken past about the 50-day moving average for itself. So it's a very strong kind of a case building up that the FMCG stocks in the sectors which were huge underperformers, I think they could probably try and see some bit of covering of price action for themselves. But I would probably expect this to be just a moderate kind of a rally. For example, for a high beta sector, we would probably place a higher targets in terms of momentum by a scale of 5 to 10% at least. I think for the FMCG stocks, we can probably put 5% as a near-term target range, as a near-term cap for the stocks.
Right. Okay, that's the take coming in on FMCG, which reminds me of Devyani International, their foray into Thailand, and look at what it's been doing to the stock today. It's been on a tear, 5.5% higher still right now as we speak. Naresh, I don't know if you've been tracking the charts of Devyani International at all.
So, been tracking it before. Now the stock went sideways after attempting that highs of 210 was a failed breakout. After listing over the last 2 years, many a times it has come to 200, 220 zones and faltered. So out here, that continues to remain a problem. So today is just a one-day tick. I would expect sideways move to continue, and the whole sector is going sideways. Majority of the names have not seen much of a price action. So time to have no view on them.
Point taken, but we also spoke with the management of Sapphire Foods from the space to get a sense as to when do we expect a recovery, because Q3 was expected to be a bumper quarter, didn't play out like that. In fact, there has been a decline that we have seen in the SSSG of the company. So going forward, what's the outlook? Listen into what they told us.
I think all of us were living in a bit of hope, saying that post Diwali we should start to see consumer demand picking up. But I think it's not worsened, it has not improved. And perhaps this has been the trend for the last 3 or 4 quarters. We are still hoping that the balance part of the year will go down quite well. The last 3 or 4 quarters on Pizza Hut undoubtedly have been disappointing on the brand. We've got to work on building greater level of consideration, greater level of repeat users. And indeed, that's the plan. But for the moment, I think we will scale on expansion on Pizza Hut. Towards the April-June quarter, I think things should start to see improvement. But really, and I just want to underline this as a last statement, we are not looking at the market and crying about it. I think there is opportunity for a company like Sapphire Foods. With our execution, we'll be well prepared when the market turns. And there's lots of action on both KFC and Pizza Hut.
Okay, on that note, let's thank Jonathan Shizel. Jonathan, good to have you on the show as always. Apologies for coming to you a little late, but let me also take some closing trading ideas as well. Kunal, what's on your list?
So from the PSU banking lot, PNB is something which looks attractive. The stock has broken past about 90-91 levels today. That's a trade which I would look to go for in the closing segment.
What about you, Naresh?
So that would be a buy on Voltas, which has been sideways for quite some time. Given a breakout today, good price volume action, crosses a swing high, could go towards the 920, 950 mark in the short term.
Okay, so those are the closing trade recommendations. Slipping into a very short break. When we come back, we track the 30 minutes of the trading session left. Welcome back. Let's take a look at some of the price volume buzzes as well. Deltacom has seen a breakout from the 7-session consolidation, so we are watching out for that. Hindustan Copper has hit the 11-year high on an intraday basis, and the volumes too are on the higher side, almost 2x the 20-day average that we have seen. Nestle has been one stock which has been breaking out, but you also have LTTS, which is actually seeing quite a bit of decline. It's formed a bearish engulfing candlestick pattern, has snapped the 7-week gaining streak, and it's in a bit of a reversal mode from the overbought zone, and that seems to be the case for a lot of IT names today, because if you look at the index, that's coming under pressure, and this is coming just ahead of the Accenture numbers. Remember, Accenture will come out with its earnings maybe between 4 to 5 p.m. today. The expectations are that on a year-on-year basis, there might be a growth of around 1.5% when it comes to the EPS and revenue. We are working with a growth of 1.6% on a year-on-year basis for the EPS estimate, while the revenue is expected to jump up by 3% on a year-on-year basis. Overall, the company's revenue guidance for the year is 2 to 5%. There are parts of the street which is expecting that the upper end of this guidance might be trimmed a bit, while if you look at the overall operating margins, they are expected to be between 14.8 to 15%. So that's on Accenture that we are talking about. Last quarter, the company had managed to beat the expectation, post which we saw a bit of a rise on that stock. But let's see what they deliver today. Gurmeet, what's your sense as to what should be the trade on IT right now? Just stay away or start building up positions?
It's a tough call, actually. I think there was valuation comfort till about 2 weeks back. There's been, I think, Nifty IT index is already up more than 10% in less than 3 weeks. Some large cap IT names still have valuation comfort, so I think the quarter might still be soft. What I'll be more interested in seeing the commentary from management. So Infosys in particular has been more conservative, in terms of upfronting the, let's say the bad news. We'd like to see how the commentary changes around AI deals now. And I think the bigger probably impact will come once the Fed officially starts cutting rate, right? I think there was a pivot, and I think they're already talking of 3 rate cuts. So my sense is I would like to wait it out for the as far as large cap IT is concerned. If you see, for example, companies even in large cap like HCL Tech, which have a fairly balanced portfolio between discretionary, non-discretionary tech spending. One of the larger ERD plays, software business, it's actually done quite well. It's almost at 1500 kind of levels. Tech Mahindra, Infy, and Wipro is where it's still a bit of a laggard. TCS obviously has posted flattish number, decent set of numbers, and that also has been around 38, 39. It hasn't corrected much. So I would like to watch for the commentary. Mid-cap IT valuations are quite stretched. You look at, you want to look at Happiest Mind, you want to look at Persistent. I'm talking of some of the better ones. So if you have a 3-6 month staggered approach in IT, I think it still makes sense from a risk reward perspective. Maybe some allocation now and some allocation post commentary.
Gurmeet, have you been tracking the IPL auctions or no?
Yeah, I've been getting alerts, and I'm happy because I have unlisted shares of CSK as a disclosure.
No wonder. Anish and I were just talking about in the markets, we freak out if stocks get, the valuation becomes uncomfortable, but no PE applies to IPL auctions. But, that aside, for the market per se, where are you getting uncomfortable now on valuations?
Yeah, so, some pockets in small cap and micro cap space, the kind of oversubscription in some of the IPOs. Too many IPOs hitting the street now. I think this week itself you have almost a dozen. And few pockets in defense and companies where stocks are just running up on order book. A lot of the orders have very long gestation periods. We have seen in the past 2003 to 7 how if commodity cycle turns, interest rate turns, how the impact it has on margins and working capital. So I think the execution ability for a lot of those companies is still in in an uncharted territory in my view. So be careful. I think there are good names there. So if you see, for example, a Siemens, which is now demerging the energy business, and L&T, they have 12-13% EBITDA margin. But if you go down, level two, some of the mid-tier names, you got to be a little careful. I'm not saying all names are bad. And I'm getting a little, I think slightly on the NBFC's front. I think RBI is tightening they're a little worried on the unsecured lending, especially small tickets. So they've increased risk weight. I expect more regulatory interventions going forward, which can in the near term put pressure both on the CET1 as well as some bit on the return ratios as well.
Sure, point taken. But the other stock which is coming under a bit of pressure is Z Entertainment. That has been actually fairly volatile today. It's recovered from the day's low, but still languishes with a cut of around 3%. The latest statement coming in from Sony that they haven't decided about the extension yet, and they're waiting by to hear latest proposal from Z. In fact, we spoke with Karan Taurani on the matter as to what one should expect for this deal going forward and what one should do with the stock. Listen into his recommendation.
What we believe is that Sony is not willing to go for a further extension herein. I think that is primarily to do with the negotiations and the terms of the deal, because we believe that there could be some kind of change in terms, because of Mr. Puneet wanting to be the CEO probably, and Sony not agreeing about the same because of the ongoing investigation of him. So I think the extension is primarily basis that. So we believe that over the next 2 days we'll get clarity in terms of where that is heading. Otherwise, I think if the extension is sought for, we believe the extension could be for another 3 to 4 months, and that would primarily be for the regulatory approvals, which is from the MIB side, maybe a fresh approval with the ROC side for the new CEO, some kind of shareholder approval for the new CEO. In terms of stock price, definitely 170, 180 levels, it was a compelling buy. Even right now, we believe that investors, should hold on to their positions, because again, we do believe that there's a very high likelihood of this merger going through. We don't see, Mr. Puneet kind of, jeopardizing the position of the shareholders in the company, and we believe a positive outcome will emerge out of this. But fresh additions, I think, it's slightly risky at this point of time, just in case, something doesn't work out in their favor.
Yeah, that's the take coming in on the Z-Sony merger. Still a work in progress, it seems. For the market, by the way, we're nicely perking up. We're holding at that 21,500 plus level, in fact, on the futures. With the Nifty spot as well, it was a bit of a hit and go. And then from there, we've receded just that tad bit. Metals, clearly, that seems to be the theme which has been playing out well of late. And today, too, you've got a Hindustan Copper perking up nicely. In fact, I just want to bring up the last... 1 week chart, if we can, for the likes of a Tata Steel, for a Vedanta, which of course, announced a dividend just as of last evening. The Nifty metal alone has surged a comeback of nearly 5% Gurmeet, seems a little foolish to ask, but any contra bets other than IT that you have a view on that one can take in this market?
I think the another very beaten down space is this agrochemical space. My personal view is that the sowing has been pretty good after a good crop. If you see the two-wheeler sales, I think, and some of the farm equipment sales, it tells you that there's some pickup in the rural economy. As we approach general elections next year, we will also have an interim budget. I expect more money spending on rural infrastructure. So whether it's related to the irrigation, the Gati, the Jal Shakti program of the government, as well as on fertilizers, etc. There was some negative news on PI industries as well. It corrected almost 10-15% from the high. I think the capacity is only going to come in 2025, and you need to have a lot of efficiencies and processes in place. It's just not that the patent gets over and suddenly somebody can just take the market share away. So that's one pocket I like. So like something like a Tata Chemical, for example, trades at like 13-14 times. Nice combination of agrochemical, soda ash, as well as specialty chemical, good management. PI we already discussed. So that's another pocket I like. And, slightly also contrarian view on some of the within, as I said, NBFC's housing finance. I think there's some pull down across the theme after the post RBI action. But I think HFC's, there's a secular, housing upcycle we are seeing, and that's going to last for probably a much longer period of time.
Taken, but time now to bring you an ET Now exclusive. We learned from reliable sources that Ather Industries is entering partnership with a marquee name, and this one is something that you don't want to miss out. Lisa, who exactly is this marquee name?
Yes, so this morning Ather Industries, they have announced that announced a strategic partnership with a global lithium-ion battery producer, and they will be entering into the electrolyte additive space. Now, what we are gathering from our sources is that Ather Industry has entered into partnership with none other than the global EV manufacturer Tesla. And this strategic partnership is for the supply of electrolyte additive partnership, and it will be exclusively an exclusive tie-up with Tesla. Now, what are the sources gathering is that Ather's revenue is likely to see an upward trend due to this contract in the new segment, and Ather is also currently commercializing a new one molecule and more likely to follow. They are in discussions with 3 more molecules. Ather has already developed and developing products like vanillin carbonate, fluoroethylene carbonate, as well as propane, which are these are electrolyte additives. So yes, Ather will be exclusive manufacturer for Tesla for all the additives that they need. We tried connecting with the management, but for now they said that they will not be able to comment on anything at this moment. So that's on Ather Industries.
Yeah, that's quite interesting. The stock of late has been fairly volatile on account of that entire news flow of the accident that happened at one of the units. But if they have tied up with Tesla, that will be a great news, because we've all been, reading those headlines how Tesla has been trying to increase their supply chain from India and expand their presence. And this could be just one of those partnerships. So let's see how the street reacts to this one, and if we get any confirmation on that story or not. But let's also bring on board my colleague Sharad. He's been working his phones to understand what the dealing room chatter has been like. Sharad, which is the stock which is on dealers' radar today?
In focus is Nuvoco Vistas, and what we are hearing from the dealers is that there's select buying coming in from a domestic institution and a clutch of HNI investors. When we're looking at the volume of the stock, that has picked up almost 18 times its 20-day average, and interestingly, this stock is coming up near its 3-month high levels. Now, the DIs which are already invested in the company, as per the September shareholding pattern, the bigger names include SBI Mutual Fund as well as ICICI Pru Mutual Fund. Now, of course, the buzz, especially in the mid-cap cement space, is of course they're coming in because of the consolidation coming in the cement industry. And going ahead, also it's expected that the largest cement players will be looking for acquisitions as well.
Right, okay, we'll leave it at that, Sharad. That's the buzz on Nuvoco Vistas. The stock, of course, has cooled off from the top of the day. Gurmeet, just wanted to get your sense in on what's the market view now on PSUs. They've given fabulous returns throughout the year, and I'm sure will continue to do so in pockets. But the recent spate with what happened with the sugar and the entire ethanol story, does that leave somewhere a doubt, a grey zone, or a sour taste?
I think government would be a seller, especially if you see 2-3 years back, the entire market cap of PSUs was, $100 billion, excluding PSU banks. And since then, it's been almost like 3.5 times jump to market cap. I think so that overhang will always remain. And that's actually happening with most private names as well. We're seeing a lot of PE and promoter exits at high valuations. But I think the entire space has run up. I think one mistake which happens in a bull market is that X has run up, so Y should follow. And I think when you start giving that hypothesis, you are entering into a zone where accidents can happen. And that should be avoided. I've seen so many guys saying, since HL has run up, the others run up, so should the other defense stock should also do. I think that should be avoided. I still find some value in PSU banks. I think that space hasn't done as well with the kind of, there's a change in the way credit underwriting is done. I've not seen a 0.7, 0.8% NPA in Bank of Baroda for a long time, 10,000 crore plus kind of an NI growth, good fee income as well. Very good adequate provisioning, guiding for like 15-16% credit growth, and maintaining NIMs at about 3.2, 3.3%. So some of the large PSU banks like SBI, Bank of Baroda, Bank of Baroda trade at 6 times earnings, 1-time book. SBI 9-time earnings, 1.1, 1.2 times books. I think there's some comfort there. I would not like to go level 2. And selectively in some PSUs, especially in railway, where we are seeing, let's say the current order book to sales is like 10 times. So there's decent visibility with Vande Bharat launches, with more wagons getting added and backward integration on mobility as well. So there's some value pockets there, but in general, I think the space looks a little expensive to me.
Expensive than of course what it was before, but just need to make sure whether it's just a complete re-rating of the sector that we have seen and there are more legs to go for this one or not. But we've also been talking about Shankara Buildcon, which has actually taken a bit of a restructuring. Today of course we have a call at 4 p.m. which will be tracking in terms of what are the details come out, but that stock is one stock which is doing okay. And then you have names like Century Ply, Keynes Technology. Kunal, what's your view on some of these names? Shankara Buildcon, Century Ply, Keynes Technology?
So out of them, Greenply is something which I do track, and I think the stock is up 14.5% so far. That's something which has come out of a major consolidation. So I think the last time the stock was almost at this 240 plus levels was I think in 2018 September, November 2018. From there, the stock has now confirmed, seems like confirming a breakout for itself. Ideally, these kind of stocks, they generally tend to give a single day price action, and then for the next couple of days, we see a mild correction to these names. And if the stock in the next couple of days doesn't see any major correction or a retracement, I think we would probably call this as a breakout move for Greenply and such of the names. So I think from the pack, this is the one which I do track and looks attractive.
Okay, point taken. So that's the name that Kunal is suggesting for now. Greenply is the name on his radar. But separately, you have a lot of these other buzzers as well in the trading session. On the downside, it is Gujarat Ambuja, JSW Infrastructure, HPL Power, Siemens. These are some of the names which are in the red. But on the gaining side, GE Shipping, BEML, Aarti Drugs, these are some of the names which are actually standing out. Gurmeet, just to build on to the question that even Aisha was asking, it's getting more and more difficult for people to perhaps deploy money. There are reports talking about how a lot of these funds and PMS managers have stopped taking money as well. Do you also feel that constraint right now, a lack of opportunity in the broader market?
I would selectively agree. As I said, mid and small caps in particular. Yeah. So, is it to me? Sorry.
Read your point.
Yeah. I'm seeing there is some lack of opportunities in small mid cap, clearly, and so I think more balanced approach is needed. I made this point 2 months back also. Today, you see the 10-year bond in India, it's gone down from 730 to 715 since the Fed pivoted. You will see multiple rate cuts next year. The Fed is indicating 3 rate cuts, which means the bond yields will come off anywhere between 50 to 100 basis points. Which means if you buy a bond today at, let's say, 715, 720, and you take like a 50, 100 bips drop, you will make a mark-to-market gain between 5 to 6% with 7% running yield. So that's like a good double-digit return on let's say a good bond, GSEC portfolio, which is relatively, I would say not risk-free, but very low risk, right? So be a little more balanced, but there's a lot of value still in large cap names, in a lot of them. For example, look at the largest private bank is still available 15 times. Large IT packs still reasonable. The likes of HUL, etc. haven't done well at all. Kotak hasn't moved. Half of the Nifty, in my view, is still at about 17,000 Nifty levels.
I just want to bring up the intraday graph of Ather because that's reacting to the ETNA exclusive that we just highlighted. And what we're understanding from our sources is that they've entered into a partnership with global EV manufacturer, none other than Tesla. Look at the big spike up that you're seeing on that stock, 1.6% higher. And just for the benefit of our viewers who are tuning in, we're understanding that they've entered into a partnership with Tesla. Ather, remember, announced a strategic agreement with global lithium-ion battery producer, entry in the electrolyte additives space. And it seems that this strategic agreement between them and Tesla is currently on the way, and Ather's revenue is likely to see an upward trend because of this contract in the new segment. They're currently commercializing one molecule, another one is likely to follow. And when Gurmeet, when one talks about energy transition, and it's in its pure basic, how we understood it first phase, EVs, the entire supply chain as well comes into focus. I mean, case in point being Ather now. Any interesting plays here?
So we are very, very constructive on energy. So look at, for example, there was news on sugar, constraint on sugar syrup and juice being used for ethanol, and we saw Praj dropping. A very good clean energy play. One of the, we call it a bioenergy engineering play. You got an opportunity there. India is going to add almost 60-70 gigawatts of capacity every year. If you see, for example, there's already tenders of 50 gigawatts for thermal, coal-based thermal alone, and that's why BHEL has around NTPC alone plans to add around 12 gigawatt next year on coal-based thermal plants. So look, imagine the demand it will have for transformers, insulators, cables and wires. I think it's a very, very strong secular trend, and I think this should be played. There are opportunities in the EV side. See the run up in Tata Power after languishing at about 200, 220 levels for a long period of time. So starting from generation to the entire ecosystem, including transformers, cables, etc., we are extremely bullish. I'm extremely bullish on even on the traditional energy. I think because of this ESG bandwagon, a lot of that got ignored. Just look at the way Coal India, NTPCs of the world have gone up in last few times. There was so much valuation comfort there. So we are taking it as the entire energy basket. We are not really differentiating between renewable and let's say non-clean or whichever terms these days you call them to be.
So that's about the entire power transition theme. We're just winding down to the trading session. 3 minutes left. So let me take it across to Naresh to ask his view about some of the big buzzers. Orient Electric is higher by 8%. Nuvoco Vistas, as Sharad was pointing out, is seeing good amount of price volume action, and then Aarti Drugs as well. Anything that pops up on your radar, Naresh? Mute yourself.
Nuvoco Vista pops out on the screen because a lot of names have really done well. The stock has been sideways. It has made multiple bottoms around 330. Similarly, multiple tops around 385 to 390 over the last almost 8 to 12 months. So sustaining about 385 would be a breakout, which could take it to 450, 470 levels. So, and today there was a big block deal as well. So looks pretty interesting at current levels. The risk reward is very interesting. A stop below 365 and an upside towards 450 is possible.
Okay, point taken. Let's take the BTSC trades as well. Naresh, complete your point and tell us what are your BTSC trades?
Voltas stop loss at 890, target price of 920. Second is a buy on Federal Bank, which continues to be in momentum. Stop loss at 157, target price of 165.
Voltas, Federal Bank, these are the top recommendations as BTSC trades from Naresh. Kunal, what about you?
JSW Steel is something which I'd recommend. I think at 855, where the stock is trading right now, would look out for targets of 900. Stop loss at 835, and even I have Voltas as a buy. The stock looks attractive for a target of 980, stop loss at 875.
Okay, so that's the take coming in. JSW Steel, Voltas, these are some of the names that our charters are liking. On that note, Gurmeet, Naresh, Kunal, we let you go. Thanks so much for making time and speaking with us. We're ending another trading session, and it's not been a bad close given the fact we managed to hit fresh record highs on an intraday basis. 21,500 is what we scale. Yes, we've cooled off from there, but can't complain given the kind of momentum we have seen over the last 5 to 7 trading sessions. The star of the trading session today was Reliance Industries. That alone was powering the index by 30 points. You also had Coal India, which suddenly perked up as much as 6%, 12 points being added on account of that. And then FMCG pack, ITC, Nestle, Tata Consumer, HUL. These were some of your other top performers. So we should pull up some of these names on the chart as well. NTPC 2 from the entire public sector entities world was higher by around 2%. Not a great day for IT per se. Today there was a brokerage note from Kotak as well. Downgraded HCL Tech, so that's going home with a bit of a red card. Infosys, TCS ahead of Accenture. Earnings are not factoring too much from that particular event. ICICI Bank was also down about 0.7%. Energy pack was quite active as I pointed out. So Reliance, Coal India, these were the big names there. On the losing side, metals too was coming under pressure. So apart from Hindustan Copper, which managed to gain 5%, there were other names like NMDC, Tata Steel, and Nalco, which did not do too well in the trading session. And then individual names I saw on news flow, Devyani International for that matter, and a lot of other those order wins and block deals were in focus.
Yes, they were, and they were reflective in the stock moves as well. So finishing off in style for Devyani International, not as much for the Nifty, just a touch and go with 21,500. But historic day nonetheless. And on that note, we're going to wind it up right here on this edition of Closing Trades.